Hello, Carol. Thank you so much for joining me today. For everybody watching, Carol has been my accountant, my CPA for we're going on 7 years now, which is just crazy. And you are by far just like my right hand man. Like I come to you for everything. I trust you and everything that you do for my accounting services. So thank you so much and welcome.
Thank you for having me.
Absolutely. So today I want to talk about we're going to have a nice little conversation about taxes and being a freelancer because I feel like so many freelancers are so confused when it comes to taxes, setting up your business account and getting the benefit of being self-employed. Whether you have a full-time job or a part-time job or you're 100% self-employed, I feel like a lot of people are just kind of confused on all of that. So let's talk about all of that. But first, I wanted to ask, you are a remote accountant, right?
Yes.
So what does that entail? What does that mean?
So you can reach me from anywhere that you are. You might be sitting on the beach enjoying the sand. We notice it's a lot easier for business owners to meet them where they're at. And so if you don't have an extra appointment where you have to leave everything and kind of go and see someone, it's a lot easier to just do it over Zoom. And I can help you with everything that you need. It's a lot easier for us as well. It kind of is a win-win on both.
Yeah. When did you start doing remote? Was that because of COVID?
So we always had some clients that were outside of the state. So we did
Okay.
have the Zoom option available. We had an in-person office before, but then with COVID, like there are so many different things we had to do and like check everybody's temperature that we decided, nope, that's no longer an option. And we do want to get back to what we're actually good at. And that's accounting, bookkeeping, and taxes and not checking somebody's temperatures.
I remember that. I remember when we were in Colorado. You're still in Colorado.
Yes.
I'm now in Florida. But when I was in Colorado, I came to your first office and then you moved. And I remember there was like a waiting room where we had to sit and then get our temperatures checked and then like one by one. And we were all wearing masks. And it was just like a very difficult time all
Yeah,
around. And
for
so
sure.
from there, you just kind of dropped the office and you said you're going to be remote. Can you work with somebody from any like state?
Yep, from anywhere. We have international clients as well. So it actually makes it a whole lot easier for you. My
Oh,
office
wow.
manager is also military spouse. So no matter where the military sends them, she's able to work, and that just really helps me.
Yeah, that definitely helps. What are your main clientele right now? Like, I'm a freelancer, I've been working with you for so long, but what is your main clientele that you typically work with?
So it's mainly freelancers, so anybody who has a small business, because I see that I can help them the most. So I did get into taxes because I wanted to have a job in 2009. But then I noticed I just really want to help people. I want to make sure you're in a better situation than you were last year, or you just have more knowledge on what you can take in expenses.
Awesome. If I'm a brand new freelancer today, I just started doing some side hustle work, I'm bringing in some extra income. Where do you suggest I start?
Whenever you just have a great idea, great marketing idea, a great idea for your products, it's always good to kind of think of like the basics. And so basics for me is registering with the state that you're in, especially whenever you're freelance. I always recommend to have an LLC. LLC stands for Limited Liability Company. Nice part about that is if somebody would sue you, they would only be able to sue you for the profits of the business and not you. The other portion to that whole part is also to kind of put your business away from you personally. So that LLC is really one of the things that I usually recommend. And then there's little things that people forget, and that's sometimes that the city or the county that you're in requires a business license. So here in Colorado, Colorado Springs doesn't require anything. I live in Fountain. Fountain requires it. And so
Oh,
sometimes we just forget that there are certain steps. And so what we do is we help you with your LLC registration and with any type of business registration that is out there. For anybody that lives in an HOA, please make sure that you check what your HOA actually has in requirements. They can shut down your business if you're not doing it right. So big thing. If you have an HOA, please check that because it's so easy to get that extra license. Licenses are usually anywhere between $25 to $150, and losing a business over a license that you might have forgotten to get is just a really hard part, and that happens all around. So those are the things that I usually recommend to check. And then if somebody starts that LLC or already has the LLC, I just verify to make sure that they registered it right. So in every single state, whenever you register an LLC, it's a state-based company. So if you move somewhere else, you might have to move that LLC with you, which means now you register a new LLC in the new state, or you have still the other LLC, but you change that to a foreign LLC. Kind of just what you have to remember whenever it comes to your business structure to begin with.
That's amazing about the HOA. I had no idea. Thank God I'm not in one, but a lot of people are. So
Yes.
Are you saying that when you register your LLC and then you go and you get your city license, right? You also need to get an HOA like approval or license?
Sometimes. So sometimes it's just the approval that you need, that you just let them know I got my city license. Sometimes it's also that you need to prove that you have the city license. And so, Colorado Springs doesn't require one, but the HOA that you are in might require you to just get an approval. And it's really simple. It just takes a little bit longer. So whenever you have that idea, you want to start a business, those are the things that you should think of first. Let's make sure we have, the basics. And then you start your business is usually the best way to do it.
Okay. And then kind of what you were saying about moving, could you essentially, let's say like someone like me that I could work from anywhere, it really doesn't matter if I'm in Florida or Colorado, my business is my home. It's in my home. I can work from anywhere. Would I technically have to move my business or start a new one? Or could I still operate my business in Florida if I were to move back to, let's say, Colorado?
It always depends on where the main office is. If more than 50% of your income comes from Colorado, you have to make sure that you have a business license here too. So you would just register the LLC as a foreign entity with still the address in Florida. So you pretty much would file 2 returns or 2 registrations, but it just makes sure that you're able to do business in both. And that's pretty much for anybody who provides any type of services. Whenever it comes to products, keep in mind there's something called sales tax. Sales tax does not make it easier for business owners because there's something called nexus. If you get a certain amount of your income from a different state, you might get nexus there. What that means is that they consider you having a location there. So for example, for California, if you have a lot of income coming from California, be careful because they might consider you having nexus there, and then you have to apply to their laws as well. And there's just really strict ones, like in California, you have to pay $800 for an LLC. There's lots of different things that kind of come into play. So whenever you're providing services, it's usually great to work with, to have your own homepage or to go through Fiverr, for example. You kind of see where all of your people are coming from, and they're paying you through a third party is usually much easier than you have sending invoices to each person. Because whenever you send them from you personally, you have to make sure that you keep track of that.
This is why I hire you. That is a lot. And I feel like this is where people get the rub. There is a starting point that is relatively easy. Getting that registration of the LLC, getting your city, make sure that you don't need a license for the city. And then from there, starting expensing and having someone like you that's kind of looking out for you and making sure you're getting everything filed correctly, depending on the kind of business you have. Like I'm a service-based business, so I don't have products. I don't need to worry about sales tax. But then again, if I did want to open up a product-based business, now we're going to run into some other forms that we need to fill out and expenses and things like that. As far as LLC, I set up an S Corp way back in the day because that's what my dad had and I thought that's what I needed. What is the difference between the LLC, the S Corp, the C Corp, the sole proprietorship? What are the differences from a tax perspective?
Okay, so LLC, it's your business registered with the state and it's a state corporation, okay? Whenever you have that, you can tax it in different ways. So one thing is a sole proprietor, which means on your personal tax return, there's something called a Schedule C, where you show income and expenses. And that can be your sole proprietor LLC. On any profits that you make, you're going to pay self-employment tax. So that's your share of Social Security, Medicare taxes. The other portion, and that's still having an LLC, is you can become a partnership. Partnership just means there's more than one partner. The way a partnership works is you have to make sure that you file your tax return by March 15th. that partnership then gives each partner a Schedule K1, which goes into their tax returns. So let's say somebody had a $10,000 profit on a partnership. It's a 50-50 partnership. Each partner is going to show an additional income of $5,000. And so that's an LLC registered taxed as a partnership. You can also be a C corporation. Just what that means is that your business itself pays taxes. So the taxes don't go to you personally. The business itself pays taxes on the profit. If there's a loss, the business doesn't have to pay any taxes, but it doesn't help anybody. And if you would have a loss,
I've heard that's, sorry to interrupt you, but I've heard that the C corporation is kind of like the one you don't want to go with.
No, like that only makes sense if you make hundreds over thousands of dollars, because they have one flat tax rate. And so whenever you make a lot of money, it makes sense. Yes, you want to make sure you pay the least amount of taxes. However, most of my clients are not necessarily there. And so if I see a C corporation, I'm like, what? Like, who told you to be that? And so the other option that a lot of people feel that they should use is an S corporation, because it sounds great and their neighbor and their friend did it. S corporation just pretty much means the same as a partnership. You have to file your tax return by March 15th, and then you get that Schedule K1 based on the shareholders. However, an S corporation doesn't require a second owner. So for you, like you're 100% owner, you can be an S corporation. You couldn't be a partnership unless there's a second partner. The S corporation does have requirements, and that's what kind of everybody forgets. So one of the major requirements for an S corporation is that the owner operator is going to be on payroll. So instead of just taking money and paying yourself, you actually have to run that money through payroll or through a program. And that kind of tells you that the $1,000 that you wanted to pay yourself actually end up to be, like $890 because you had tax withholdings. And a lot of my clients forget this huge requirement, because the nice part about an S corporation is, let's say you have that $100,000 profit at the end of the year. If you would have the $100,000 profit as a Schedule C client, you would have to pay self-employment tax, which is at least about 16% that you have to pay in taxes. Whenever an S corporation has a $100,000 profit, you only pay your tax rate. So if that tax rate is 10%, you only pay 10%. No self-employment tax there. And the idea is really, if you pay yourself a reasonable salary, let's say that is $50,000 of that 100,000, then that lowers your overall profit for the S corporation, but it makes sure that you pay yourself through payroll. So we see lots of people just being S corporation and grabbing the money and kind of paying themselves without running it through payroll. And that's a huge no-no, because if you don't pay yourself reasonable salary, it just costs you lots in penalties and interest. And then the other part to an S corporation is just keep in mind there's something called corporate minutes. And so that's any time that you make any managerial decisions, like hiring a new accountant, changing your headquarters, anything like that, you should have a piece of paper that states corporate minutes, when you met or when the officers of the company met and what they decided. It just really helps. There's some states that require that, some states that don't. But what we see across the board is that everybody wants to be an S corporation, but doesn't know that there's requirements to it. And so I always recommend is talk to a tax professional, talk to us. We want to make sure that you understand what your requirements are so you can use it the best way. Is an S corporation the best way to go? Most of the time. However, if you don't have enough money coming in to sustain payroll, might not be the best situation right now. So you might want to start with the C Corp, with showing everything on a Schedule C, so a sole proprietorship, and changing that later on. You can do that. The only thing with an S corporation is that the IRS doesn't automatically give you an S corporation. You have to apply for it or send in some paperwork, and then they will pretty much give you that entity classification.
Okay, so I'm going to recap all that.
Yeah.
So basically an LLC could be a sole proprietorship and a partnership, right? Mm-hmm. That's under the same like umbrella as the LLC. And then you have an S Corp, which you will be required to implement payroll, even for the owners. Mm-hmm. You have to have payroll so that you're paying that Social Security, Medicaid, Medicare, all of that. And then you have the C Corp, which is for like multi-million-dollar companies, So with the LLC, you're saying that if you started with that and then your business started to grow a lot, more, you started bringing in that revenue, now you can sustain payroll, you could then file the S election form to the IRS so that you then become an S Corp,
Yeah.
correct?
Yes.
Okay.
And the LLC
Okay.
can still be the S Corp. So LLC means, like Schedule C, partnership, or S Corp, kind of all the same. The LLC just really, whenever you register an LLC, you just pretty much register a separate entity. And so the moment you register a separate entity has to have everything separate. And that starts with bank account. An LLC should always have its own bank account because the LLC is you started a new entity. And that's the major part. So whenever the LLC, so the limited liability that everybody wants, so why people want to create that LLC, one part of that is that you cannot intermingle funds. So you cannot break that corporate veil, which means you cannot go shopping at Walmart with your business card and just pay all of your personal expenses with it. And so that's why it's so important to create a business bank account so you keep them aside from each other. So LLC, make sure you have a business bank account so you have that liability. If you intermingle funds, like what a lot of sole proprietors do, they intermingle, they put all of the money that they receive into their personal account. That liability that they had will not stand whenever they are in court, okay, whenever it comes to it. But they still can say they have an LLC. Like that doesn't take away from it, but the liability portion of the LLC will just not stand up.
Gotcha. So if you have an LLC, you want to register for that LLC and immediately go and open up a business bank account in that LLC's name so that your expenses are completely separate. And then we can kind of figure out, what business expenses are, but I think they're the most obvious, office supplies, furniture that you're going to use to, furnish your office, equipment, computers, things like that. I don't know if I want to get into the nitty gritty of that. That's kind of getting a little bit too precise. I just want to stick to kind of the basics right now because I feel like I said, that's kind of where people get confused. And then if anybody has questions or they want a deeper dive into the expenses part of things, go ahead and comment down below and we can go ahead and do another episode where we go a little bit more because I feel like we're already maybe kind of, I don't know about viewers that are watching or listening, but I kind of get like this zoned out, like all of a sudden you're talking Chinese, and it's just like, whoa, I need to go take a nap now or something. Like it's very overwhelming, which again is why I feel like having a tax professional is so important. But that's kind of just the first steps. It's not that hard, right? It's not that hard to file a business. I know here in Florida, you just go onto sunbiz.org, register for your business. But if you feel like you're not wanting to put that responsibility on yourself, someone like Carol or a CPA can do that for you, correct?
Yeah.
And then from there, once you have that business, account where you're going to run everything through, when you work from home, how does the split work between that personal and corporate if we're talking about that corporate veil? Like I have a home office. How does that work?
So it's always based on square footage. So if the area that you use exclusively for business, and you have to use it exclusively for business, is like 10% of your house. So let's say you have 1,000 square feet home, your home office is 100 square feet, then 10% of your expenses can be shown as an expense. And if you own your home, that would be 10% of your mortgage interest, of the real estate taxes that you pay, your insurance that you pay, as well as your utilities. And utilities includes everything that you usually pay in utilities, and that's water, gas, electric, and your trash, just like you would have an outside office. And so that's actually a really nice expense that you already have whenever you work from home, under the assumption that that area that you use for business, you use exclusively. So you have an extra bedroom. That's great because it's the easiest way to kind of see how much square footage you have. But sometimes it's also just an area in your living room. You only use half of the living room personally, then you can use the other half for business. And that's what a lot of people just forget, or they forget to use the insurance that they pay for the house. There can be a lot of different expenses that kind of come together. But for someone who just started and let's say they made $5,000, for the year. They don't want to pay taxes on those 5,000. You want to think of like different expenses that you had, and a home office is a great start.
Okay. Okay, that's good to know. What if you use the majority of your home? Like for me, I'm a UGC creator. I'll film in my kitchen sometimes. I'll film in my living room. Does that make any difference, or we're just sticking with the 10%?
Yeah, so unfortunately it doesn't, because it has to have that exclusive use test. The only person that can use, like the whole house would be childcare providers, because they're really
Ah,
utilizing their house, and then it's based on time that they're open and that they're utilizing it. But freelancers, even though you go in your garden and you go everywhere else as well, it's not a necessary expense that the IRS sees, so you can only use that area. However, if you have a lot of equipment that you're storing or anything like that, that would be part of your expense. So let's say you have that one office that you're using exclusively, and then you use, like a lot of extra area for the equipment storage. You can utilize that as well, and you just add it to your overall square footage.
as far as tracking your expenses and all of these things that we just talked about, a lot of people are confused. Do they have to do QuickBooks? Do they have to pay it monthly? It's not a cheap subscription fee. What program do you prefer to use? And does it have to be every month that we have to pay for it, even though we do taxes once a year?
It really depends. I love QuickBooks because the easy part is you can invite me as an accountant. However, there's other programs out there that you can invite accountants. The nice part about that is that if you invite an accountant, they can see what you've done. So they can pick up where you had any issues with, or they can kind of run your bookkeeping whenever you get too busy. That's why I love QuickBooks. So I love any type of payroll or bookkeeping tools. However, you can also just start easy and have an Excel spreadsheet. If you have that business bank account, you have a business bank statement, and you can always see, okay, what did I spend money on? Was it subscriptions? Was it office supplies? What was it? Was it advertising? And kind of have an Excel spreadsheet that works as well. Like for
Oh,
me,
wow.
I really just need totals. I need to know what the total amount was that you paid in advertising. If you have that in an Excel spreadsheet, great. Like you can also upload Excel spreadsheets at the end of the year. We also have like a little worksheet that we give to our clients where they can fill it out themselves, just so we get the information. And I don't need to see all of the receipts. However, it's a very good idea to kind of take a picture of the receipts that you have, because after a couple of years or after a couple of months, sometimes you can't read that receipt anymore. And so the nice part for taking a picture of it is if you had a guarantee on it or warranty on it, you're only going to be able to get that warranty if you have the receipt. And so if you have a picture of it, it's always a good thing to kind of keep track of that. But it really doesn't require you to have any type of bookkeeping tool. You just have to think about how much time do you want to spend with bookkeeping. If you use QuickBooks or a software related to it, they are connecting to your business bank account. So the transactions automatically come into the program, and then you categorize them according to what you bought or what type of income you had. If you're doing that all on an Excel spreadsheet, you have to do it in manually, which means anything that you do manually, we're humans. Like we make mistakes. There might not be, like there might be an extra zero, or zero might be forgotten. And so for that, it usually takes, like you to look over your bank statement and everything twice to make sure everything is in that Excel spreadsheet. So it comes back to how much time do you want to use for it? Do you rather want to be out there connecting to other business owners, finding partners, and promoting your business? Then, like QuickBooks, even though there is an expense to it, it really makes sense. If, however, you love doing bookkeeping and, like keeping kind of the business going and seeing where your income and your expenses come from, then, please do it on an Excel spreadsheet. But make sure that you do it wisely. Like, I am not a fan of a lot of expenses at the beginning. No one is. You should be making money because then you enjoy what you're doing and you're going to do it way better than anybody else. Because, like we want to go to people who like what they're doing. And if you don't like what you're doing, like your business will show. And so I really want to make sure that people understand sometimes it's good to get that bookkeeper, and even if you hire, like a bookkeeper on the side, it's sometimes really nice because it just opens up it opens you up for actually doing more for your business than just sitting there doing your bookkeeping.
I could not imagine doing it in Excel. But I have talked with freelancers that literally just started and they're like a month or two in and they're like, I could literally count how many expenses and my income for the last like week, or month or whatever it is. So it makes sense to kind of maybe start that way. And then, but it does take a lot of time. And like you said, you could mess up with the numbers and it may not be accurate. And then all of a sudden you're going back at the beginning of the year or the beginning of the month and trying to find that one number that was off. As far as bookkeeping goes, like I reconcile my own books just because I was, taught how to do that. What do you offer? Do you offer where you could do it for them and also teach them to do it themselves? What do you prefer and how does that work?
I'm a big fan of showing a business owner actually what I'm doing, because they can see if I did my job or if I didn't, and they need to know what I'm doing because they're going to have to pay me for it. So what we always make sure is that everybody understands how to do it themselves, including reconciliation. So you can decide what you want to do. We can always jump in and do it for you. We can give you weekly updates. It just really depends on how we can best help you, because I want to see businesses succeed. And at the beginning, nobody wants to spend money. But later on, whenever you see, oh my gosh, I have this great contract, or, like all of a sudden business is booming, I want to have a way of giving everything away to someone who will just pick up right away. And that's what we can provide. And that's what I love, because you see that so often, like even in my business, I'm super busy January through April, and then like it slows down a little bit. Well, during January through April, I'm not doing my own books. Like that, I can't. So it kind of helps because I'm in the same situation as my clients. And so, like I can do more or less based on, like my income or based on just availability.
Absolutely. Now, when you do have a QuickBooks, do you just run it through the business and not your personal? Can you also do bookkeeping for your personal? Does that matter, or it's strictly for the business account?
So usually you attach any business related account. So if it's a Schedule C business where you don't really care about the liability portion, you just have a little bit of income that comes into your personal account, but you're paying everything through that personal account as well, then I recommend make sure you have that personal account linked in so we can track everything. So we can track all of the expenses that you might forget. Because even if you have a business bank account, look through your personal account and actually see the amount of business things that you pay. Because you forget there's like Adobe that you use for business, but you always had it for you personally. So, like changing all of that to business is always a good idea.
Okay, awesome. Then we were talking about earlier, I think in our last consult, we were talking about this form that the IRS was requiring all LLCs to fill out as of January. What do we know about that?
Yeah, so it's a BOI requirement, really fun. They changed a couple of things at the beginning. They wanted every business that opened throughout since 2021, like that's have an LLC to register for that. What the registration is for is anybody who owns at least 25% of an LLC needs to register. It's just a one-time registration that you have to do once a year, kind of like a periodic report. You just say, like who is part of that LLC. The idea behind this is to make sure that everybody pays their fair share of taxes and all of the registrations are up to date. They did make a couple of changes. So if you had your business before 2023 and you've always been an LLC, you have until January of 2025 to register. Oh. And only the businesses that were just created this year, they have to register by January 1st, 2024. However, that registration should not cost you anything unless somebody else does it for you. So it's just kind of like a reporting requirement. And if you don't do it, though, it's going to cost you a whole lot of money. And so if you have a business, if the registration starts on January 1st, we're going to have a lot of information on our Facebook page too. Follow us on Facebook, or just we'll put a link on the test as well. It's really important that you just know about it, because what we've seen in the past, like 5 to 10 years, is that there's so many new things. We know about it, but no one else does. Or somebody knows about it and we have never heard of it. So there's really a lack of communication from the states and from the IRS in general to their taxpayers, and what you can use and what you can't use. And sometimes there's also a lack in communication between tax preparers and CPAs. So it's always a good idea to ask your CPA or your tax preparer about certain things. It really helps us keeping track of everything that's new. lots of different things. And so it just ensures that you get all of the credits you're entitled to.
That makes sense. So that's good to know, because I know the last time we talked, they were like, if you don't file by January 31st, you're going to owe like $50,000 or something crazy like that. I do a little bit of driving. What do I need to do as far as like mileage? I'm terrible at tracking my mileage. Is that really necessary?
It's very important. So you get at least 65 cents a mile for each business mile that you have. Business miles, really simple. Whenever you leave your house and you have a home office, and the reason why you leave your house is business related, it's a business mile. And that can be going to the post office, buying supplies, meeting clients, going to networking events, checking out your competition, like all of that considered business related, and tracking those miles is important. So I always recommend that everybody downloads a mileage app. There's lots of them out there. I personally love MileIQ. I don't get any money for them for referring them, but it's really simple. You either swipe left or right if it's personal and business. Use it myself. That's usually the only thing that I can do. Or, like if you don't do it while you're driving or after you're driving, you can do it on a Sunday afternoon. You can just go back and check your miles that you've driven and kind of classify them. If you don't have a mileage log, you really have to go back and check your calendar and like write on your calendar where you went and kind of do an Excel spreadsheet on where you went and how many miles that was. It's usually a huge forgotten expense that people just blatantly just say, oh no, I don't want to do it. It's so important because like even, like the couple of supply runs that you do and you're living in a remote town and it's, like 30 miles to the next town, that's a huge expense going back and forth that you usually forget if you don't have the mileage log or if you can't log your miles. Just thinking that you might know how many miles you drove, it doesn't work. So you can't just say, oh, I drove 10,000 miles. Nobody drives 10,000 miles. They don't, because you might drive 9,965 miles or 10,001 mile, but you don't drive 10,000 miles. Like that has never happened to me. And I've done taxes for a very long time. So tracking that mileage is really important, even though you might not want it. But I'm telling you, usually the first time that I ask someone to go back and track their mileage for the year, they ask me, how can we do it simpler? And that's the mileage log or a mileage app on your phone. We use our phone for everything, so why not for that?
And is that because we could get a bigger deduction, that we could get more money back if we do track our mileage accurately?
Yeah. So for example,
so it's in our favor. It's in our favor to do it.
Absolutely in your favor. If you have a profit of even $1,000 as a scheduled fee client, you will have to pay taxes on $1,000. If, however, you have mileage that's worth $650, now you're under $400 in overall profit, and you don't pay a single dime in self-employment tax. So it's very important, especially even if you use it just a little bit, it really adds up. People like forget about it, but you do use your vehicle, like very often. As a self-employed individual, you go to Walmart, just make sure you buy your Walmart, your personal and your business groceries. And then that trip to Walmart is actually a business expense. So you can really do positive things whenever you are self-employed and kind of think of the things that would work for you.
Very cool. Very cool. That's good to know. And actually, I need to get better at that too, because I'm one of those that I just forget to do that. But I'm going to download the app and I'll link it below in the description as well. It's MileIQ, correct?
Yeah.
Okay. One of the biggest things that I really thrive on when I work with somebody like yourself, or when I find somebody I want to work with that's going to help me run my business, is that I can talk with them. Like I can understand the fundamentals of what they're going to be doing and how it's going to benefit me or hurt me or whatever, taxes wise. So where do you stand with like consultations? Is it like a repeating thing where whenever I need to talk with you, I can talk with you? How do you do that?
Yeah, so anybody can schedule a consultation. I'm sure you have the link for it that you can give everyone. So how we feel about a consultation, or our first consultation, it's always complimentary, because we want to make sure that we fit into your lifestyle and you fit into ours. I want to make sure if you have like a couple of questions, always bring those to the consultation so we can address them, because sometimes it's just a couple of pointers that you might need, and then you're going to be able to take care of it yourself. We have consultations from 15 minutes to an hour. You can schedule them easily on our website, and that just ensures that all of your questions are being answered.
Do I pay you per consultation once we start working together, or is that included in my tax preparation? How does that work?
Okay, so we do have flat fees for our tax preparation. If there's a couple of consultations that you need in order to provide you with the tax return, that's all included. After we're done with your tax return, any type of consultations throughout the year, we do charge for them. Overall, we just want to make sure we're available for those questions.
Okay, great. And my last question to you today is, how do we get in touch with you? Is it just by scheduling a consultation, or do we email you? What's the best way to kind of start working together and just figure out if we're a good fit?
Really simple. All you have to do is click on one of the links below and register for your consultation, and then you get information from us.
Wonderful. Thank you so much for joining me today. I feel like I already knew this stuff, but then I still learned a couple of things, like the HOA thing and the form that's coming out, or the registration that we need to do for next year, which we need to talk about that, because do I need to do that as an S Corp?
You will, but not by January 2024, January.
Okay. Good. So we'll have another meeting about that soon. I always love chatting with you and talking with you, even though taxes make me like zone out a little bit, but I'm glad you got my back so that I don't need to worry about it too much. So thank you so much for being here today. And if anybody is interested in getting in touch with Carol, getting more information, her consultations are free. It is linked below. And like I said, she's been my accountant for 7 years now. We go way, way back for pre-COVID. And I know that you're going to be in great hands with her and her team. Thank you so much, Carol, for being here.
Thank you so much. I really appreciate it.